G'day viewers. I'm just going to read you my latest article from Tableland's Precious Metals. One of my subscribers the other day, her father was telling her, look, gold's going down, and I reminded her to check her invoice and see what she paid for the gold, and showed her some graphs from the date that the invoice was paid, and showed her that gold has gone up $500, but it spurred me to write this article. Precious metals cannot go up, so I'll just read the article. When you hear or see that gold or silver has gone up, you're thinking of the amount of government-issued currency that the precious metal is priced in. So when the precious metals goes up, it's the same as saying the currency has gone down. For example, in the past 5 years, the Australian government issued fiat currency has lost 168% of its value priced in gold. With the dollar price of gold moving from $1,554 an ounce to $2,623 an ounce, the same is true for silver, $19.50 an ounce to $26.31 an ounce. Bearing in mind that these prices are the future market's prices and not applicable when you order physical metal. The physical metal right now will have a premium on top. In my most recent order, I paid $35 an ounce for silver plus the freight and insurance, from memory. And there are now long waiting times between ordering the metal and receiving it. This is another layer to the deception of what is real and what shows on your screen as the future's market price. So next time you hear that gold or silver has gone down, you will know the fiat currency showing as digital figures on your mobile device or PC or at the ATM have gained purchasing power. There is no doubt the current resumption of the precious metal bull market will have its fluctuations from time to time and may fall in Australian dollars as the stocks and real estate fall, similar to what they did in 2008. But just like in 2011, after the crash, they have a long way to go to reprice the amount of dollars that have been and continue to be created out of thin air by the Reserve Bank and the Treasury of what was once this great country, before the advent of the Reserve Bank Act in 1958. In fact, if you reprice gold in the amount of fiat dollars in the world right now, depending on which measurement you use, gold should be anywhere from $7,500 Australian an ounce to $15,000 Australian an ounce. The way to think of the value of your gold and silver investment is to price gold and silver rather than dollars. Gold priced in silver is approximately 100, down from a recent all-time high of 125 to 1. It takes 100 ounces of silver to buy an ounce of gold. Considering silver is mined at a rate of 10 to 1 compared to gold, there should be about 10 times as much silver as there is gold to invest in. Maybe a bit less because we use it in computer screens. Of course, some of the silver is used in phones, computers, medical applications, etc. But on average, it should cost anywhere from 10 to 16 ounces of silver to buy an ounce of gold, not 100. This means silver is very cheap at the moment and a much better buy than gold. The best strategy right now is to buy silver and wait until the gold-silver ratio goes back the other way. Some fund managers would recommend to start selling silver and buying gold when the ratio comes down to 50 to 1, on the way down hopefully to 30 to 1 and maybe even below. Another consideration is the silver-gold real estate stock price ratio. If you are already invested in gold and silver, the ratio between a house dwelling that costs $500,000 and gold is 192 ounces of gold or 16,666 ounces of silver to buy one house. In the coming real estate and stock market collapse, there will be a point in time when 192 ounces of gold buys $1,920,000 Australian or 3.84 houses, whichever comes first. The same can be said for stock prices. There was a time in the first quarter of 1980 when the Dow Jones gold ratio was 1.41 to 1, allowing holders of gold to sell their gold and buy the Dow Jones at a huge discount. Those days are returning. In summing up, I'm holding the course and watching as the world's central banks and governments keep creating currency out of an accounting trick. Sit back and enjoy the ride as your precious metals become repriced against the biggest bubble ever blown in history. Hold on for the inevitable market correction. This time the currency creation will help to bring the Ponzi scheme to an end. The can has been kicked as far as it will go before sliding into the gutter. The sooner the better for the economy as a whole. Only after the collapse of all the false wealth can we clear the malinvestment and consequential moral hazard from the economy. The true prosperity we crave springs from freedom. Freedom to produce, freedom to trade, private property and the right to defend it. Not a right granted to us from high office, but the inherent, inalienable right we were born with to be free. Thanks for watching, guys.